Good morning. It's me again, Kenny Polcari, and it is Wednesday, June 2nd. This is host of the party, market commentary, everything you need to know to get your day started. And so let's talk about what happened yesterday. Stocks started the month of June snoozing, right? Not really doing a whole lot. We did see some initial reaction on yesterday's market open, but it failed right away and really left for kind of a non-eventful day, right? Investors are still waiting for tomorrow's ADP report and Friday's non-farm payroll report, in addition to what the Fed is going to say in a couple of weeks, and the ECB is what they're going to say tomorrow as well. The argument is about good inflation versus bad inflation. So where do you stand on that argument? The U.S. gets hit by another cyber attack, except this time it wasn't the energy infrastructure, it was the food industry. Oil marches higher again. Airlines welcoming back business travelers. That's a positive for the airlines. It's a positive for business. It's a positive for the global economy. And it's a positive for energy demand. So what's for dinner tonight? We're going to try the spinach edamame pesto with a boiled shrimp over linguine. It's simple to make, easy to make, quick to make, yet it's always a great dish to have. So what happened? So stocks really began June by hitting the snooze button, right? They didn't do a whole lot. Yet futures were up significantly yesterday morning going into the opening. And we saw the S&P open up 14 points. So it took it right below Friday's high at 42.16. It then surged up and through 42.18 on its way to 42.30, which is the all-time high, settling in at 42.34 by 9:31. And then it was all over, right? And then the markets just backed off. The S&P failed there. The Dow and the Nasdaq, which had struggled to go higher as well, they failed. Everything kind of backed off as the day wore on. There was nothing really. There weren't really any drivers yesterday that were going to continue to push the market higher. So by the end of the day, we saw that the S&P, which had rallied hard in the morning, actually ended the day down 2 points at 42.02. The Dow did add 45 points. The Nasdaq gave up 12 points, and the Russell surged ahead by 25 points, which is 1.1%. That was a great outperformance by the Russell, considering the other indexes did not a whole lot of anything. And that once again speaks to the U.S. economy, because the Russell small and mid caps, otherwise known as the SMIDs, continue to speak to U.S. economy, as they are U.S.-centric names typically. They don't have a lot of international exposure. And so, as investors try to assess where the U.S. economy is, they're going to certainly play in that arena. And yesterday's action tells you that people are getting comfortable with where the economy is. So the question is it good inflation or is it bad inflation? Because that's going to really that's going to be the next driver, right? So good inflation, we talked about this yesterday, is rising wages, rising prices. Everybody does better because there's really no change, right? If your wages rise, yet prices rise, you're really kind of in lockstep. So that's all good. The bad inflation is if wages don't rise, yet everything else rises, and it's all driven by monetary policy mistakes coming out of the Fed. Now, the Fed will tell you there's no monetary policy mistakes, that they're well in control. Once again, the issue is transitory. And investors appear to be getting kind of comfortable with that because they've jawboned it enough, right? We've heard it from, 8 or 9 different Fed representatives that continue to try to jawbone the story. Now, there is some division. But overall, they continue to rear at the fact that, yes, they think it's temporary, with some of them saying, but it is time to start talking about tapering, while others say, it's time, not yet. We're not there yet. But we're going to see, and that's what's going to happen later on this month, right? In the end, the high growth names and the healthcare names, which led the markets higher at the end of May, were the biggest losers yesterday, right? Tech lost 0.6%. Healthcare was down 1.6%. Even utilities gave up 0.6% yesterday, which is kind of interesting because utilities is much more of a defensive play. So the fact that they gave up suggests that investors are getting more comfortable. So what did do well yesterday? The recovery trade, certainly. Economically sensitive trades did well. Financials were up 0.6%. Energy up a whopping 3.8%. But we talked about this. We talked about the opening U.S. economy, the opening global economy, the demand for energy. I've been saying it for months, and now energy has been outperforming oil, trading near $70 a barrel. Not there yet, but trading near. And what else? Basic materials are up 1.4% yesterday. The value trade, once again, beat beating out the growth trade with the SPYV, which is the S&P Value ETF, up 0.4%, while the SPYG, which is the S&P Growth ETF, was down 0.4%. So continuing to show the split there and reiterating the story about value over growth in 2021. But the issues remain on hand, right? While investors have grown more confident about inflation, it's not going to be an issue. Global central banks are not going to do anything drastic. They're not going to unwind their stimulus. They're not going to start raising rates anytime soon. There are other issues, right? So you've seen surging commodity prices. I mean, have you seen coffee? Coffee is out of control. Certainly lumber, copper, soybeans, all that stuff is out of, we know that, but that's all out of control, so that's one issue. You've got supply chain setbacks, right? Semiconductors kind of causing, and other supply chain issues in other industries, but semiconductors for sure, causing disruptions across the tech industry, across autos, across even building houses, because a lot of new houses are running on smart technology, and in order to have that smart technology, they need semiconductors to operate those computers. So you're starting to see even supply chain disruptions there. Never mind appliances and all the other stuff where we're seeing disruptions. So there are some concerns, right? And then there's that very uneven labor recovery story, right? Which is leaving a lot of companies unable to fulfill positions. And we saw this on the news all day yesterday, over the Memorial Day weekend, with crowds surging everywhere in restaurants and bars and all that stuff. And you had these restaurant owners and bar owners saying they can't hire people. They're out there, they're advertising, we're hiring, we're open for business, yet they can't fill those positions, and that's just one industry, which is why tomorrow's ADP employment report and Friday's non-farm payroll report will be important for investors to listen to, because it will, in the end up driving Fed policy decisions. Now, it may not come tomorrow or June 15th, but it will in the months ahead, and we know that they've made that very, very clear. Yesterday, Ecos data revealed that market U.S. manufacturing PMI is still bullish, coming in at 62.1, well ahead of the expectation. That is bullish. Anything above 50 represents expansion, and we're in the 60s now, so it's a strong expansion. Construction spending was flat, which is a little bit of a disappointment over last month. ISM manufacturing, which is just another group that studies Purchasing Managers Index, that also came in at 61.2, certainly a strong number. So it's bullish. Both of those reports support each other. ISM employment fell though to 50.9, so that was a disappointment, and it was a mixed appointment, and that caused investors to kind of just sit back and take a breath and say, okay, let's just see kind of what's really unfolding here. There's no data point that's causing us to have to run right out and buy, or have to run right out and sell, and so therefore we got the churn, right? Not a whole lot of action. It was in the end, it was a non-event the whole day. Today's Wall Street Journal runs with a number of headlines that kind of define the times for sure. Oil prices just surging to record highs. OPEC and allies see higher demand, and while they are going to produce more oil, the fact is they're not going to produce enough to make any significant downside pressure on oil. And so the question is, where does oil go, right? Does it go to 70? Does it go to 75? Does it go to 80? Where is it? Where's the sweet spot? I guess we're going to find that out in the days ahead. And like I said at the opening, the meat supplier JBS just got hit with a cyber attack. And so the headline says, the meat buyers scramble after cyber attack hobbles JBS. That's going to be great for cryptocurrencies, as they're all paid down ransoms, as these ransomware companies are making millions of dollars in ransomware as they attack all these companies. There's a whole nother conversation we have to have about it's like these are legitimate businesses, and they just talk about, we'll just pay it. And they talk about how much these ransomware companies have actually made by attacking other industries. So it's a little bit odd for me to talk about that. And business travel, like I said, is coming back, and that's great for the airlines. It's great for the global economy as not only demand for energy, but people start to live again and travel the world and start to do business again. This morning, U.S. futures are just churning in place. They're not doing anything dramatic at all. Dow's up 26. The S&P is actually down 1. The Nasdaq's down about 20 points, and the Russell's ahead by 1 point. So it's really a mixed reaction. The 10-year Treasury is flat at 1.6%, so no move there. The dollar's just a bit firmer, trading on the north side of 90. Gold is hovering just around 1900, no big move there. And oil continues to move higher, inching ever closer, West Texas Intermediate, to that $70 a barrel mark. Yesterday, we heard from 3 Fed representatives, right? You heard from Governor Brainerd, Lael Brainerd, and she told us we're a long way away from any target, but be prepared to adjust policy if needed. So, that's kind of a mixed message. She's not really saying we need to adjust policy now, that we're a long way away. So that's here on the left side. Then you had Vice Chair Randy Quayle saying that if the Fed is wrong about inflation, he said this last week as well, but he reiterated it, if it's wrong about inflation, there's no need to worry because they have plenty of tools to deal with it. So if in fact we find that the inflation is heating up, he's trying to tell everybody, no worries, sit back, relax, it's all good. And then we got St. Louis' Jimmy Bullard, who, by the way, is a non-voting member of the FOMC committee, so he can talk all he wants. He's not going to have a vote at the table, yet people do respect what he says. He says that while employment is remaining at sub-pandemic levels, because it is, there is significant evidence that there is a labor tightness. And it may be time for the Fed to start talking about tapering. So look at that. So you got three different views yesterday, or actually you had maybe two. Bullard and Brainerd seemed to be kind of on the same side about starting to talk about it. Or actually, Brainerd said, no, we're not even talking about it yet. We could, but we're not going to talk about it. St. Louis president says you should talk about it. And Randy Quayle's telling us don't worry about it. And today we get 4 more Fed representatives going to talk, right? So what's that going to tell us? You got Philly's Patty Harker, Chicago's Charlie Evans, you got Atlanta's Rafi Bostic, and you got Dallas's Bobby Kaplan. So what are they going to have to say? Now, we already know that's 2 and 2, right? Both on 2 guys on one side, 2 guys on the other side. Yeah. So we basically know that 2 of them are going to say, no, nothing to worry about, no need to start the conversation. While the other 2 are going to say, yes, we do need to start the conversation. So it's going to add a little bit more confusion to the conversation, but it is what it is. European markets are also churning this morning. Again, no change in their overall theme over there either. It's about inflation. It's about the recovery trade. Investors over there now anxiously awaiting any news from the ECB, the European Central Bank. So tomorrow, where they're expected to just come out and talk about policy, no change is expected. Remember what Christine Lagarde said. She said the ECB has absolutely zero interest in changing their policy until the Fed steps forward and makes the first move. So as long as the Fed does nothing, you can expect the ECB to do nothing. The PPI across the region is due out today, and that will reveal the state of inflation across those markets. Bitcoin this morning is trading at 37,000, kind of right where it churned yesterday, right? Maybe it's up a little bit. Ethereum's trading at 2,600, and Dogecoin is now trading at 40 cents. Coinbase now revealing that they're going to put Dogecoin on its platform. They'll phase it in over the next couple of weeks. So whether or not that's the reason Dogecoin is up, or whether or not just the whole group is a little bit higher, or maybe it's because of the cybersecurity attack. Maybe Dogecoin's hoping they're going to be the currency of choice. In any event, I said oil continues to march higher. Yesterday we heard from OPEC Plus as they agreed to supply more oil to meet demand, but not enough to really push prices lower, but enough so that, demand will still surge, demand will still outstrip supply, prices will go higher. So the question is, where does it stop? Is it $70 a barrel? That is kind of the sweet spot. Is it $75? Is it $80 a barrel? I guess we're going to find that out in the weeks ahead. The S&P closed at 42.02 last night after it did make a new intraday high at 42.34, all within the first minute of trading before it failed. Eco data today includes the mortgage apps and the Fed's Beige Book, neither of which is going to drive the action at all. So don't expect today's macro data to really cause investors to move one way or the other significantly. The market does feel a bit tired. All right, I keep talking about this. It feels a little bit extended. It feels tight. It needs time to digest. Not only the news that we have, but the news that's expecting to come down the pike over the next couple of weeks. Obviously, the Fed being the biggest piece of news that it's waiting for. The inflation theme, the rate theme, the policy theme are all front and center, and that's going to continue to drive the speculation about what analysts and economists and strategists have to say about what they think the Fed's going to do and say and how they're going to position it. So it's all going to be very tight until after the 16th, right? Friday's non-farm payroll report could create some angst. depending on what it reports. Will it be a disappointment like it was last month, or are we going to see a surge in employment this month and a revision to last month that's going to be upward that might be more reflective of the number we thought? Either way, there are plenty of jobs available to anybody that wants to work, right? You know me, I'm still in the cautious camp. And while I'm not nervous, while I don't think there's going to be any kind of a crash, I do continue to kind of just tweak when I need to. You don't have to do it every day. And so money that's invested remains invested, whether I tweak it, I move it from one and I reallocate to another. New money, though, I am telling you, I'm just holding it on the side because I'm waiting until we hear from the Fed. I want a little bit more direction what we're going to hear, because I do think if the Fed does indicate that they are starting to talk about the taper, then we could have a slight pullback in the market. And so I'm just waiting for that. You know what you can do? You can text the word invest at 21,000 to get my digital business card. Feel free to download it, text me, email me, give me a call. I'm always happy to talk about the markets. I'm always happy to talk about the plan. You can also follow me on Twitter at Kenny Polcari. So let's see what's for dinner tonight. So this is really a great dish. It's simple to make. It's spinach. Fresh spinach. It's edamame beans if you like edamame. And listen, you don't have to mix the edamame. You can just make spinach pesto if you want. But this, the edamame kind of gives it a little bit of a different texture, and then you save some of the edamame beans to put on top of the pasta when you serve it. So it just adds a new texture to it. So one way or the other, you're going to make a pesto the way you do, right? So you need the garlic, you need the Parmesan cheese, you need the pinoli nuts, you need the olive oil, you need the pesto, and you need the edamame beans. Now look, if you buy frozen edamames, just put a pot of water on the stove, bring it to a boil. Put the frozen beans in there. Wait till they all float to the top. Turn the heat off. Take them out. Strain them and just cool them down with cool water. Set them aside and get ready. In the meantime, in the blender, you're going to chop the garlic, the spinach, olive oil. You're going to chop it up and make a pesto out of it until you chop all the spinach. And then you're going to take a handful or two, depends on how much you want to make, but take a handful or two of the edamame beans, toss them in there, add a little bit more oil, salt and pepper, and chop it, right? I would use 1 clove of garlic in this because otherwise you'll overpower it with the garlic. 1 clove is going to be more than enough. And then once you do that, once you get it all chopped up, then you're going to take a handful of fresh grated Parmesan cheese and toss it in there and blend it. Again, if you need to add a little bit more oil so it's not too thick, feel free to do that because you know what the consistency should be. You're also, this dish is going to call for shrimp. Right, so boiled shrimp, you're going to toss in with the pasta when it's almost done. You're going to finish boiling the pasta. So put the pasta in the pot of salted water, boil it for about 6 minutes. Then add in 1 pound of cleaned and deveined large shrimp. Put it right in the water with the pasta. It's going to cook for another 3 minutes. The shrimps will be done. The pasta will be done. Strain it, always reserving a mug full of water. Strain it. Put it back in the pot. Just add a little bit of the water back just to moisten it up. Toss it so that the pasta soaks up the water. Then add in the pesto. Toss it again just so it's all coated. And then when you serve it, serve it into individual bowls. Take a nice with the tongs. Take the pasta and take plenty of shrimp, and then top it off with a little bit more of the pesto if you want. But then take the extra edamame beans that you have, and then put them on top just to decorate. Always have more cheese on the table for your guests, and serve it with a chilled white wine, whatever your favorite is. Or it's summertime, so you can do it with a rosé. I wouldn't drink a red wine with this; it's too heavy. But either way, it's a great dish. It's simple to make for the vegetarian you. It's perfect. In the meantime, it is Wednesday, midday. The day's about to get started. Take good care, and I'm going to see you tomorrow morning.